folks, I'm Melly Little, and this is your daily TA Wrap. Well, we take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves, what happened today, and what does it tell us about tomorrow? I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. The snow-capped Rocky Mountains. It's a beautiful sight here. When the snow comes down, fresh and white, crisp and clean. So, what do we got here today? We got ourselves a market. It looks like this thing came down. We tried to bounce today. Last night we were talking about it. We were talking about we should get a bounce, and it looked, if you remember last night, we were talking about that not only should we get a bounce, we were saying that in the face of a huge decline in Apple, 7%, 24% of the weighting of the NDX, and despite that, it almost went green itself, Apple. So let's look at the ending numbers first, and then let's pop into the indexes. So the Dow Jones up 90, 15,926.5. The S&P's gained almost 11, 1792.5. The composite 14 and a third, 4097, almost 4098. NDX finishes down, the only one negative, of course, because of Apple, 3.3 lower, 3505 and 3/4. And the Russell pops on 10 and a half, 1138 and a quarter. Gold was down today. It's up a little bit after hours. It was, I think it was up about 8 today. The oil was down. Pretty much all the commodities were down today. Dollar was up just slightly, it looks like. I pulled this up because what has happened, I mean, it's not a horrible thing, but what has happened at this point is we have transitions of trends, and we now have it across everything, right? All the indexes, all the sectors, right? There's nothing bullish here anymore in this short-term time frame across the board. Okay, when that happens, you know that you've got some damage that's taking place. And so far, the damage on the longer term time frame, and I'm looking here at the intermediate, that damage not nearly as bad, but damage nonetheless, right? And if I pull this up, oh geez, let me do it the other way, because I didn't think about the screen size here. Let's pull this up so we can get the screen size to show. Oh my, I can see I'm having some functional problems here. Let's start over again. Alright, let's do it one more time here. See if we can get it right this time. So let me see, go to free tools, current market trends. So if I'm in the market trends and I try to do this one more time, and let's just get rid of this, pull this up so we can see it. There we go. Now we can, I believe, see everything. Yeah, alright. So what I was trying to say, going back to it again here, is everything in these 2 time frames no longer is bullish. Everything has transitioned. Some of them become bearish, right? There's some of them bearish at this point. As a matter of fact, the majority of them are bearish. We only have, what is it, 3 it looks like here that are not bearish. Everything else went bearish. Everything up here, right, these lead these have gone bearish only in one instance. And what I was trying to show you is there's a few of these, not that one, but there's a few of these that have also, and I'm talking about the intermediate term time frame, that themselves have transitioned. So only 3 so far, right? So you have 3 of them transitioned on this time frame. What becomes concerning is if you start seeing your intermediate term time frame change, and it starts to bleed over into the indexes, right? Because at that point you have the potential to change trend over here. And this change over here is major. When this happens, you have to pay attention. So when you start getting short term, I mean, this comes and goes, right? These can come and go. You'll get some changes here. It doesn't necessarily mean, it's not a guarantee that we're going to see a change into this time frame. But it's definitely a worry sign when you start seeing the intermediate term time frames change, because when they do, and the sectors will cause these to bleed as well if, and that's a big if, the continuation of change, right, goes on. You'll see it bleed up here and change these. When the intermediate term time frame changes, you can get the long term time frame change. That's the one thing I wanted to point out. You're starting to see quite a bit of damage done, and it's going to be a question of how far does it go. Now let's go to the charts. Let's look at the indexes, and let me grab those for you. So last night we were talking about the market wanted to bounce, and it looked unanimous across the board in terms of the indexes, and almost unanimous in terms of the sectors. Most of the sectors also wanted to bounce. And that's what we got, right? We got bounces. We got bounces everywhere but the NDX, and we got bounces in all the sectors. The bounces, weak bounces, not much volume, okay? But that's not uncommon the first time around. In other words, the first bounce, it's not uncommon to see lighter volume. And it doesn't really matter at this point. These are all inside days. Almost everything's an inside day today. What will matter is when it comes back up to areas where you know you've got some serious resistance. That first area is going to be here, then it's going to be there, and then it's going to be up here. And then I'm looking at the S&Ps, and what I'm doing is I'm using high volume, the high volume bars where we knew we should have support, but we didn't get it. Right? We came down, we did a retest regen off of these highs. Neither one held. It did not regenerate higher. It broke down. So as you come back, you should see resistance as you come back into these areas. The first area will be here on the retest regen. This high volume bar, wide price spread bar, that was the Fed bar. As a matter of fact, we got the Fed again tomorrow. Then the swing point low that was broken. If it gets through here, remember, this is a retest regen now going the other direction. It's a bearish retest regen. And that bar that's there can take this all the way back up to the top. And that price point up there is high. I mean, it's almost at the highs. 1843 and a half. It's more than likely, though, it's not going to get there. Well, not more than likely, it's not going to get there unless it gets over this area first. And if it gets through there, then it has to get over the big breakdown, wide price spread, heavy volume bar. And that's going to be a chore. This, it's possible it can get over. This looks pretty deadly. Now, we have seen over and over and over for 4 years now V-shaped recoveries. Things that should not go up keep going up. And those V-shaped recoveries, believe me, they're like printed in my mind at this point. And every time they happen, I think to myself, no, it can't be happening again. Well, is it going to happen again? I mean, that's what everybody wonders. I suspect many people think it will, because it has so many times. Because of MTTFs, because of where we are. I think we're going to get a decent bounce because this has been a bullish market. I think we will get a decent bounce. That was partly what we were looking at last night. And as of tonight, we already see a big bounce because the Turkish devaluation, well, not devaluation, increase in interest rates to shore up their lira, right, because it was caving in, and a lot of this worry and a lot of this sell-off was about currencies and about the Fed pulling off its tapering. So when the Fed takes tapering, takes money out of the system, these other countries, these smaller countries, these emerging market countries have difficulty protecting their currency. And the only way they can protect it is to raise their rates. The lira went from in Turkey they went from I think 7.5 to 12 tonight, and that was after our market closed. When I see that, and believe me, I am certain these central banks talk to each other. That makes me think that we are going to see that tapering tomorrow because of it. And I'm sure we're going to have all this language about how, the economies are going to do great, even though we've seen bad numbers out of 4 different reports now. That tapering, to some degree, has to take place because whatever it was supposed to do, it didn't do. Each of the first 3 QE processes, we saw kind of an inflation fear, if you will, come into the market. This last one, it didn't do it, right? You didn't see it. And you didn't see the markets get much juice out of it either. I believe that's why the Feds decided they have to take it back off, because it's not adding anything, and it's just dangerous to be hanging out there with all that money on the table. And they're not accomplishing anything at this point by buying those bonds and buying the MBSs. So tomorrow, probably a taper. We're probably going to see a rally again tomorrow. The setup here on the S&Ps still shows some sort of a push coming. The afternoon hours looks like it's going to happen because of the lira. That's a whole different story. Maybe at some point we can talk about it more, but it looks to me like you're going to get more of a bounce here. And if I look across all of these, they all look the same. So rather than walk through each one of them individually, I'll just glance at them. But the Dow Jones set up the same. All of these are set up the same. They're going to come back up. They're going to try to test higher. Now, as we come back up, I don't know why we didn't get volume on this one, but as we come back up, I would expect you're going to find, it's going to be different on each one, but I suspect you're going to find the stronger ones try to get all the way back up to the second of the 3 breakdown bars. So this one will try to potentially get all the way back up to here. That's 41.97 on the NDX. Excuse me, on the NASDAQ. The NDX, let's see, that one's probably going to be about the same. Yeah, it looks about the same. So again, volume's shrinking, nothing's happening. These things are going to try to bounce farther though. Let's look at the sectors real quick and see if there's anything different there. I suspect they're going to look the same too. So let's see what we got here. So I'll start with the IYT and work our way through. Okay, bounce, no volume. Yeah, it's going to bounce more. Semiconductors. And more volume. Now that's interesting. Did it get it under that low? It did. That's really interesting. It's the first one I've seen. So this one actually gets under the low and leaves even more volume, which is another signal that these things are going to come back again. All right, they're not done yet. XLB. Weak bounce. Yeah, I can bounce more, and I think they're all going to look the same. I'm not going to run through them all. Let me pop over to the Ox markets and see what's happening. I glanced at most of these today, and they're all basically the same. The semi looked a little bit different. Actually, I'm going to pop over and look at the world markets. Let's see how they are bouncing. So let's start with Europe. So the CAC, which is the one I believe is the weakest in Europe of the majors. Weak bounce, no volume. Okay, swing point low will be the retest regen on the way back. Yeah, so the congestion area is all in here, in this area here, right? And that swing point low. Now realize the retest regen has this whole area to work in. So, and you got that big top. You know, for the CACs, you know, the story is going to be when these things rise, the story is going to be is can they get back over the key area, the last key area? Because if they do, they're going to new highs again, right? They're going to pop all the way back up here if they can get through these things. Boy, this time I really doubt it, but I've doubted it before, so I'm not gonna bet the farm on it. Not with these central bankers, but I do think they're on borrowed time at this point. Let's look at the others real quick. FTSE. All right, so on the FTSE we got even a weaker bounce, and you still got a retest regen up there, and the high is almost that breakdown bar. And let's see about the DAX, the German DAX. This had been the strongest one, and boy, it don't look as strong anymore, does it? It's still up more than the others, but this one has the same case, right? And I guess that's why this looks weaker today, because this was trying to get back into the low that it broke. So I suspect this one definitely will make it back to that top of the low. But same thing. They've all got the same problem, right? The January 24th bar now is going to be the demarcation bar for everything. Anything that can get back over that bar, you know, on most of the indexes, that's the bar. So let me see what the Hong Kong market's doing, because China's the other big cog in this wheel. And they had broken down. Yeah, they can't even bounce. So you broke multiple swing point lows, 3 of them, right? Just blew them out and blew down to the downside, right? That's what happens, right? You broke it on that time frame, you broke it on this time frame, you broke it everywhere, right? That's damage when you see that kind of stuff happening. You know, that's some serious damage, and that it definitely gets the attention of the powers that be. I am having some real troubles keeping my screens up tonight. My fingers are not working very well. Alright, let's try this again. So let's go back to, if I can, to the daily. Alright, so damage there. Let's see what else we got. Let me go look at the ox markets real quick. I got up really early this morning, so I'm pretty tired too. That's probably part of what's happening here. I had some fairly large trades on it overnight. So let's look at the currencies. So I had, you know, I've got quite a few members that are up in Canada, and the Canadians are getting hammered. So the FXE is holding up. But if I pull over and let's look at the Canadian dollar, the Canadian dollar is just getting wiped out. Now that's helping their markets, but it's killing anybody that's living there, right, that has dollars, has Canadian currency. So you got you know, and I tried to short this guy and I missed it. But you had to break multiple swing points on multiple time frames. And it's just extending down, and it's getting no lift whatsoever. You're going to test that low at least again tomorrow. Let me see what the weekly, I mean this is the daily, so that was the weekly. So on the weekly you got a big extension down. On the daily you're testing again now. That low is 89.05, you got 89.02, you went under it, back over it. This could finally get a little bounce, right? But you know, this currency's in trouble. And if I go look at the monthly, right, you have the same issue over here on the monthly. You broke multiple swing points. This was the reason I tried to short, is you had it on 3 time frames on a break, which is uncommon, and it's in trouble. You know, this thing is going to go all the way back down to, it looks to me like it's going to get all the way back down to about 70, anywhere from 83.50 initially, but potentially all the way down to that low around 76. And we're still trading at 89 right now. So that's a huge devaluation. So, you know, picture yourself as a Canadian, you're holding Canadian dollars. Everything everything is getting more expensive in terms of anything imported, which is of course going to increase inflation inside Canada. Yet, unlike say the U.S., where the U.S. pretty much still is the heartbeat of the world, you don't see the other things tick up. In other words, gold's not going to run just because Canada's having problems, right? Gold will run when everybody has problems, or gold will run when the United States has problems. When its currency devalues. In terms of large moves. Now, it's a safe place to park because in real dollars, right, the gold's still worth something, but that assumes gold's going to hold its value, and I don't know that that's true. So as a Canadian, you're in a hard spot, right? And you got to almost go to the market. And let me pull up the Canadian market, and I would think, and it has been doing well. I suspect it is still doing well. And if I can get there. And that's because it's being devalued, right? So you have a situation where, and this is the Toronto Exchange, you have a situation, so you can see how this market's been moving up as the Canadian dollars are getting cheaper. And here's the recent one. You got a spill. So, and that of course is a spill in the world markets. But I suspect this thing will try to rise back up. So let's quickly look here. So you had 39.90, 99.60. Yeah, that's you'll get a bounce out of this one too. You probably get it all the way almost back to the top, if not higher, as that currency devalues. But that's a tough spot, It's a tough spot. I got to figure out what to do for my Canadian friends to help them out. All right, let's move on here. I'm going to go back to Ox markets. I wanted to look at the other currencies. I want to look at the dollar, because I don't think it moved today, and it's just standing still. And then let's see, it's not doing anything. Let's get this out of the way and look at the dollar. Okay, so look at the bonds. Just make sure there's nothing crazy happening. Bonds won't even pull back. Okay, so let's talk about tomorrow. One more quick thing. Let's see what the junk bonds did today. And yeah, they got a nice bounce too. They'll go back to the top, fill the gap. Okay. So tomorrow is Fed, right? I didn't check, but I think the meeting is the regular time, which is 2:15 Eastern. You got Google after the bell on Thursday. You've had some big earnings disappointment. If you just look back at earnings themselves, they really haven't juiced this market whatsoever. Most companies can't increase their top line, right? They're hitting their bottom lines still, for the most part. But those bottom lines, they keep lowering the bar so they can hit them. They can't get top line growth. They can't get more revenue in. You're priced almost to perfection, right, in terms of market, in terms of valuations. You're definitely stretched. And I mean, maybe somebody else could, argue against that. I'm sure they can. But if you look at the CAPE, if you look at a lot of different indicators, it looks pretty stretched to me. The economics don't look as if they're that hot. I mean, they're not bad. We're not in a recession. We're not going in a recession anytime soon, it appears. But it's not as if we're like growing at 3, 4, 5%. I mean, we keep kicking out 1.5, here, 2.5 there, 1 3/4. It's in the 2% range. That's not going to do it. Where is it going to come from? I mean, how are we going to expand this market farther? How are we going to get it up higher? We're 5 years into a move. I was reminded of that today, that next month is the anniversary of the 666 number on the SPX. 5 years, folks, coming off the bottom. This market is going to correct. Whether it does it right here or it does it a little bit farther, it's going to correct. And it's going to be something more than this garden variety, 4% stuff. I suspect it's coming. I suspect it's coming pretty soon. But that doesn't mean it's going to happen tomorrow. Matter of fact, these charts tell us it's going to bounce tomorrow. So the Fed's going to have to really surprise us to shake this market up and tear it down again. That's not their objective. I suspect we'll see a bounce tomorrow, maybe a little bit more on Thursday. But by the end of the week, and maybe on Google's report, I don't know, we're going to probably see this market reach whatever its objective is. I wouldn't say it's the end of this week. Somewhere over the next, I would think, 4, 5, maybe 6 sessions. Market's going to get up there. It's going to fail. Then we're going to get a little pullback. And then that's going to be the moment of truth, right? And so if I drew it in for you, and let me put the SPX up or something here. I'll just do it here. So if I draw it in and say, okay, this is kind of what I think it's going to do. And, you know, and consider this. I'm going to pull this over a little bit so we can draw it in all the way. But it appears to me that the scenario that you're going to see unfold is you're going to see, and I'll do it this way. You're going to see some bars print over here, and let me make them colored so we can actually see them. You're going to see some bars print over here, right? And then we're going to get that moment of truth, right, where it gets up into here somewhere, and you're going to come back down. And that could be 4 or 5 bars on the way up. Maybe it comes from this level. I'm not sure. You know, is it going to drop here? Is it going to be all the way up there? But somewhere you're going to get that pullback, and then that is going to be the moment of truth. And what I mean by that is that's going to be the question of whether it's an ABCD structure to the downside, right? Or you end up, right? These always work the same way. Or you end up doing the ABCD and getting new highs. Right, that bar, you know, in that area, that's going to be the bar. That's the one you're going to want to watch for, because when you get to there, that's the one that's going to tell you where you're going, right? Wherever that thing prints, and that's the decision bar. That's when people have to either put up their money, buy more, or take their money off the table because they're too fearful. What drives that? What happens? What causes it? We don't know. But look at your resistance points. Look at how we're coming back up. When we get up here, we'll be able to make a decision about what that bar is probably going to do, and that will be the first quarter. Probably it's probably going to outline the next few weeks. Would be my take. All right, folks. I'm about out of time here. Let me see. I didn't pay attention. Nobody asked questions. Oh, perfect. Great. Sorry, I wasn't paying attention. Good thing nobody asked, huh? I guess you're all mesmerized here. I'm going to leave it at that. Tomorrow, Fed, look for another bounce. I think you're going to use some continuation here. And then we'll see what the Fed does. And then Thursday, Friday is a lot harder. That first bounce is always the best trade, right? After that first bounce, it gets much more difficult. You know? That's the easy trade. The hard trade is when it gets up here because your risk is big on both sides. Have a great night, folks. Take care of yourself. See you next time. Good night.